Hello and welcome to yet another Views from the Veranda. So over the last few weeks I've been talking about how hot the market has been, but thought I'd touch on today of looking a little bit down the track, and there seems to be some signs that maybe the market might be starting to peak. I mean, look, of course, we're coming off an extraordinary period of price increases, something like the highest growth since 1988. That's been driven, as we've mentioned in the past, by the low interest rates, by the economy, the way it's responding, and consumer confidence in relation to that. There's still some stimulus out there, but that's starting to come off in terms of what the government is providing. And it also, as we mentioned, low stock levels. So there's that fear of missing out that buyers have that's sort of driving buyer demand at the moment. But as I mentioned before, we do some research, and our research bases through core logic. So there are certain signs that might indicate that the market's starting to peak. Firstly, if we look at auction clearance rates, last month in March, auctions were clearing at above 80%, at about 83%. Last week, the auction clearance rate was 78%. So it is starting to come off a little bit as such. You've got a rise in vendor activity. It appears to be that more and more properties are coming on the market. In the last 4 weeks, there's been the greatest growth since 2016, something like 17% above the 5-year average. So as more and more sellers realise that they are able to achieve good prices for their property, more and more are considering them putting on the market. And as I've mentioned before, supply affects demand. Lift in new homes supply. There's a lot more construction happening, more properties are being approved. That's actually something like a 20% higher than last year, and it's actually 5.5% higher than the 5-year average. So as that stock starts to come on the market, that's going to actually have an impact on demand and property prices as well. There's negative population growth. As we know, we're not getting the migrants or the migration that we have. So the number of new buyers coming in the market from overseas, or even coming back from overseas if you're an expat. So that's actually traditionally has driven demand, and therefore there will be less of those buyers coming into the marketplace as well. There's less incentives. All the government stimulus is starting to be pulled back. Everything from JobKeeper to JobSeeker, and some of the incentives that were helping people buy houses, that's starting to actually stop. So that will actually have an effect on property prices. There's this thing about the barrier of entry, which is housing affordability. At the moment, because property prices are going up so fast, there's a gap between housing affordability and people's incomes. Incomes are flatlining. So as that gap increases, as property prices increase much faster than people's income, there comes a point where houses just don't become affordable. And in fact, buyers get to the point where they're going to say, look, I'm just not going to pay those sort of prices. In fact, in the Sydney market at the moment, it takes something like 12 years on average to get a 20% deposit in place. So that's a factor. So look, although we're not saying property prices are going to start decreasing, capital gains or the growth will start to slow. While interest rates stay high and supply levels are low, and there seems to be confidence in the economy, obviously that's going to keep property prices moving along. But like all property cycles, they do reach a point where prices will start to level off. They will slow down, but they won't necessarily go down. Well, they're my views, and that'll give you an insight of what I see might be happening as we move through this year and into early next year. But look, if you'd like to know more about what's happening in the market in regard to your own property or your own circumstances, if you're buying or selling, contact us, message us. That's what we're here for. But until next time, take care and look after each other. Thank you.